Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking S&P futures. S&P hovered around the flat line most of the day. You look at an hourly chart, there wasn't much motion at all. Pretty typical of a Friday with very little economic data, but we also have Hurricane Irma approaching Florida. It's expected to hit land on Saturday at basically the eastern tip of Florida and drive its way through the state, slowing economic growth in that part of the country, going up through Georgia. Now that particular GDP is borrowed GDP. It will come back, and you also could get the potential, save for the loss of life, which is always a tragedy, you get the potential for extra GDP growth, as mentioned by Fed Governor Bill Dudley, who said that the extra rebuild could actually spike growth later on. Right now, just looking at it from a purely economic perspective, Irma actually gives the Fed a little bit of cover. And they need that cover when you see what's happened with 10-year yields, which is also affecting the unchanged nature of equities today. 10-year yields fell all the way down to 2.014% last night, hovering around 202, getting back up to about 204 today, but that is the lowest since 2016, and it is really putting a little bit of pressure on the equity markets. Over time, it actually drives money into the equity markets, but the reasons the yields are lower has the market really nervous, mostly about failed fiscal policy coming out of the White House and potential geopolitical tensions, as well as the effect of this storm and Jose, which is right behind Irma, coming up toward the United States, although Jose is expected to veer off, plus the losses we got from Hurricane Harvey that went into Texas. But you also have the dollar and geopolitics playing into the S&P being quiet today. Geopolitics, North Korea still lingers. South Korean news agency had basically said that North Korea was moving an ICBM, an intercontinental ballistic missile, to the shore to fire it before Saturday. That would be today, or maybe overnight, morning of Saturday. We don't really know, but that still lingers as you see gold spike for that reason, mostly specifically for that reason. But we also have the dollar continuing to weaken, continuing to drive lower. It just doesn't seem to be able to get a footing underneath it. And we also have this little odd thing, which is a major thing, but for the S&P it was a bit of an odd factor. The Equifax cybersecurity breach, 143 million credit report consumers at risk of having lost basically the most personal information you have anywhere except at your bank. So that will actually put pressure on some of the internet retailers like Amazon and Walmart, which we did see today. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.